Good morning, ladies and gentlemen. Welcome to the Beacon Energy PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to CEO Larry Bottomley. Good morning, sir.
Thank you, Jake. Welcome everybody to the Beacon Rhein Petroleum acquisition presentation. Thank you for taking the time to listen to this description, and also I'd like to thank Investor Meet Company for organising this session. The presentation itself is also on our website, and that can be found at www.beaconenergyplc.com, and that's in the media tab in presentations. We've also recently published the Competent Persons Report that describes the Rhein Petroleum portfolio, and that's also on the beaconenergyplc.com website, and that's in Investor Relations Corporate Documents, and it's the last document in there. That's the CPR, and then we'll also put a link to this presentation on the website once that's prepared. So to start off with, what I'd like to do is to introduce myself, and I'll have Stuart McDonald introduce himself. Many of you will know me. I've been the interim CEO, firstly for Advance, and then now for Beacon Energy since January of 2022. And I was the interim CEO, and I've become the CEO on the signing of the share purchase agreement on the 15th of December at the back end of last year. I have over 40 years of experience in oil and gas exploration and production operations. The first quarter of that was at BP, where I had a number of subsurface technical roles and then technical leadership roles, and that was based in the UK, in Colombia, and in the US. The middle half of my career was at large independents, where I had technical and commercial leadership roles, and then the last quarter of my career has been on AIM, both as a non-executive director and most recently as the CEO for Chariot Oil and Gas, as it was then. So my experience is in building E&P businesses on the international stage, and that's what we're looking to do now with Beacon. So I'll pass over to Stuart to describe himself.
Thank you, Larry. Good morning, everyone. My name is Stuart McDonald, and I'm the proposed CFO of Beacon Energy. In terms of my background, I have 20 years of energy industry and investment banking experience. I spent the first 12 years of my career with Rothschild, advising clients in the energy, oil and gas and natural resources sector on a range of mergers and acquisitions and debt and equity financing transactions. And then I spent the next 8 years as CFO of Rockhopper Exploration, an AIM-listed upstream oil and gas company with interests in the Falklands.
Thank you, Stuart. Stuart's very well known and respected throughout the industry. We've worked together very well over the last 6 months, and that's been both on the acquisition of Rhein Petroleum and the reverse takeover process that we're now undertaking. And certainly with his M&A experience and his broader experience, it'll be a great complement to the skills that we have on the board. So moving on to the next slide. This slide sets the context for what we'll be subsequently covering in this presentation. This slide 3, summarizes the acquisition of Rhein Petroleum within Beacon's strategic framework, which we've set out during the course of the year. And the goal of the strategic framework is to build a self-funding platform for growth, and that's what we believe this offers us. Our target within this strategy is the acquisition of mainly operated production, development, appraisal, and exploration assets in onshore Germany. And this portfolio gives us 3 things. Firstly, it gives us current cash generative production and a clear path to additional production during the course of this year and next year. Secondly, it gives us material development opportunities, and these are simple developments from discovered resources that sit within the portfolio that we look to fund from the production that we'll be generating. And thirdly, it gives us potentially transformational exploration upside, exploration opportunities that we can test during the course of the overall program, and again, that'll be funded from production. So the self-funding goal for us, the aim is to use development drilling to drive the production. That increase in production gives us free cash flow, and that free cash flow can then be reinvested back into the portfolio. So this is the self-funding goal, and specifically the Erfeld and Stockstadt MIT development, which you can see in the graph in the center of the bottom of this slide. This is the production profile that's been described from the competent persons report that I referred to earlier. This production profile over the life of field generates in excess of $100 million, and the aim is that this $100 million that will allow us to fund the development, appraisal, and exploration of the Rhein portfolio. And the Rhein portfolio, the licenses, fields, discoveries, and the prospects, they're described on the map on the right-hand side of the slide. So in terms of the context of the combination, the formerly Advanced Energy company, during the course of the last year, we have created a clean cash shell from what was formerly Advanced Energy. With that, what we have done is targeted assets that fall within that specific strategic framework of discovered resources, cash generative production, high margin assets in attractive fiscal regimes. And that strategic framework has been driven by our desire to build a self-funding platform for growth. In terms of Rhein Petroleum is a private company. It's principally owned by Tulip Oil, which has a stable of companies within a fund. Some of you may have seen that Tulip sold Tulip Oil Netherlands to Kistos in 2021. That was in the region of a 220 million euro sale with additional contingent payments. And Rhein Petroleum for them is part of that process. Rhein Petroleum has a portfolio of mainly operated assets onshore Germany, and importantly, it also has an excellent in-country operating team with a proven operating capability and expertise that we'll be using during the course of the development of that portfolio. So the combination of formerly Advanced Energy and Rhein Petroleum brings three things together. It brings the experienced Beacon board. It also brings the portfolio that Rhein Petroleum have built, and very importantly, it brings the operating capability within the team that sits within Rhein Petroleum. So within that portfolio, there's current production. Those are from the Lauben field and from the Erfelden Schwarzbach main field. There's also growth potential in simple high margin developments. Those are additional developments within Erfelden, but also other discoveries that sit within the portfolio, Graben and Stieg, and there's material, indeed transformational upside potential in exploration in the Weinheim prospect and in Steig Deep. There's also growth potential in Germany, and this is through consolidation and portfolio rationalization of companies that are there, but also the application of current technology in the Upper Rhine Graben, which is an old basin. As part of these growth opportunities, Rhein Petroleum are currently in discussions to secure an additional development asset, which also has near-term production growth. With that as an introduction, what I'd like to do now is to pass over to Stuart, who will go through the transaction details, E&P context within Germany, and Rhein Petroleum's operating capability.
Thanks, Larry. So under the proposed transaction, Beacon will acquire the entire issued share capital of Rhein Petroleum from Tulip Oil, which is a private equity-backed vehicle, and Deutsche Rohstoff, a German-listed oil and gas company with operations in the United States. Consideration for the transaction is broadly split into two parts. Firstly, Beacon will issue new shares to Tulip and Drag, such that they will hold a combined 33% shareholding in the enlarged Beacon. And secondly, Tulip and Drag will receive contingent consideration in the form of an earnout equivalent to 10% of future production from existing discoveries in the Rhein portfolio. As part of the transaction, Beacon will undertake a £6 million net of cost equity raise to fund the drilling of Schwarzbach 2 well and bringing it into production. Importantly, Tulip will cornerstone that equity raise, but on completion, they will hold around 37% of Beacon, with Drag holding a further 3%. We see the terms of the transaction as highly attractive. No upfront consideration, and all the capital being raised being reinvested into the ground. We're acquiring a portfolio of reserves, contingent resources, and material exploration upside, so plenty of running room for future growth. The valuation metrics are, we believe, attractive, with an NPV 10 of $55 million and cumulative free cash flow of around $100 million over the life of the project. And from an operational standpoint, we are acquiring simple but economically robust, low cost operations with OPEX of less than $10 a barrel and netbacks of more than $55 per barrel. In terms of the business climate in Germany, I think it is fair to say that Germany has been generally overlooked in terms of its oil and gas credentials. I would make a few highlights. So there's been material oil production in Germany since the 1950s. There are a number of well-known operators who have been active in the country for decades, including ExxonMobil, Wintershall and Neptune. Given the industry dynamics as we see them, we see the potential for consolidation and portfolio rationalization, a key source of growth and deal flow for smaller companies such as Beacon. And finally, I would highlight the low political risk environment with a well-established and supportive operating and fiscal regime, stable and predictable permitting processes, unlike many other places onshore the UK and elsewhere in Europe, and an increasing need for domestic energy security, given the current world events. Turning now to slide 7, I think it's important to highlight that we are not only acquiring an attractive portfolio of oil and gas assets, but we're also a fully formed and highly experienced operating team. Rhein Petroleum have been active in the country for over a decade, with a strong and proven operating and HSE track record, having delivered multiple discoveries and developments during that time. In a country like Germany, ESG is fundamental to Rhein's license to operate, so the company will, quite rightly, continue to focus on reducing the carbon footprint of its operations. And with that, I'll now pass back over to Larry to go through the details of the assets.
Thank you, Stuart. So moving on to slide 8, what we'll be covering here are the near-term growth catalysts, the first of which are within the course of this year. So the map on the right-hand side of this slide shows the produced reserves, and that's in that pale green color, and current production and the proven undeveloped reserves and resources, which are in the darker green within the Erfelden High. So in terms of the accumulations on that map, Stockstadt field in the southeast, that light green color, that produced between 1952 and 1994, When it was discovered, it was the largest field in the Upper Rhine-Graben basin in terms of reserves and production, and that field is now no longer producing. That field is connected to and extends over to the Erfelden High, which is that blue dashed line that shows the focus of our forward development. The Erfelden High is made up of a number of structural compartments or segments. In the west is the Kupfkopf segment, and that produced between 1956 and 1985 and was operated by Exxon. And then there's the currently producing Schwarzbach main section, which is in the northern part of that Erfelden High. And that's been producing since 2016. So there's some 6 years production from that segment within the Erfelden High. The development targets that we are looking at are in the south of that Erfelden High. There's the Stockstadt Mitt segment, and that was discovered by the Exxon SM1 well in 1985. And then there's the Schwarzbach South segment. In terms of the Erfelden Stockstadt Mitt segment, that's the focus of the development program, and indeed much of the CPR is given over to the description of that development. The 2P reserves of that segment are 3.8 million barrels, and from the CPR that generates the production profile from the graph at the on the left-hand side at the bottom of that slide in dark green. So it has the capacity to produce up to 900 barrels a day during the course of the field life. Also, what that graph shows is the free cash flow that's generated from that Stockstadt Mitt segment, in excess of $100 million of free cash flow from its production. And part of that free cash flow will be used to fund the appraisal and development of the Schwarzbach South segment. That's the light green part of that graph, and that segment has a 2C contingent resource of an additional 2.4 million barrels, which is described in more detail on the next slide. So on this slide, it describes our plans for the progression of those near-term growth catalysts within the Erfelden segments. As part of the acquisition, we aim to raise £6 million, and that's to fund the Schwarzbach 2 development well this year. Production from that well funds Schwarzbach 3 production well, and that's targeted for late 23, early 24, and then the Schwarzbach 4 water injector, which we are targeting in 2024. The graph on the bottom right-hand side shows the evolution in the dark green of the production from the Erfelden Stockstadt Mitt segment, and the free cash flow which is the blue line, shows the cash that will be generated from that segment during that period. So over a 2.5 year period, it should generate free cash flow in the region of $20 to $25 million. This investment primes that we'll be raising primes the production, and the production then underpins the drilling of the Schwarzbach South well, which is targeted in early 2025, and with its potential production profile shown in light green on that curve. So in summary, we've got a portfolio of catalysts for shareholders over the next couple of years in Beacon's journey, and those the funds that are generated from that can fund the development, appraisal and exploration of the remainder of the Rhein Petroleum portfolio, which is described in the next 3 slides. So moving on to slide 10. This is the first of the medium-term growth catalysts. So the aim is for the free cash flow from Erfelden Stockstadt Mitt compartment to fund the development, appraisal and exploration of the remainder of the portfolio. And following on from the Erfelden development, our focus will be on the discovered resources, of which the Stieg field is one. Rhein Petroleum discovered this field in 2019, and it tested 60 barrels a day from the Maleta and 160 barrels a day from the PBS two reservoirs. In terms of the Maleta, that's a 2C resource that's in 1.6 million barrels, and in the PBS, the deeper reservoir, that's a 17 million barrel 2C net contingent resource that sits within that. So we envisage a two-phase development within this field. The first is to develop the Maleta, the shallower reservoir, at some 600 meters below ground level, while appraising the deeper PBS, and then following that appraisal of the PBS, then developing the resource associated with that. The development of the reservoirs, and particularly of the PBS, will require a water supply well to be drilled, and that will be drilled by drilling down into the bunter, which is a structure that sits below the Maleta and the PBS, and in and of itself is also a prospect. So the Stieg Deep prospect has prospective resources, 2U prospective resources of 16 million barrels, sits below that feature, and we'll be testing that for free as we go about the development of the PBS. So moving on to slide 11, with the next medium-term growth catalyst. And again, the aim is for the free cash flow from Airfeld and Stokstad Midt to fund the appraisal and development of this asset. The Graben oil field produced between 1959 and 1963, and this was from 2 wells, and it was based on 2D seismic data. Subsequent 3D seismic data that has been acquired over these fields, over this field after the production ceased, demonstrates a significant up-dip attic oil component to the production from those wells. And also, modern petrophysical software demonstrates a material amount of pay that was bypassed, that wasn't produced from those wells that were drilled back in the late 50s and early 60s. Net to Rhein Petroleum, there's some 5 million barrels of very low risk contingent resources that sit within this asset. So moving on to the next slide, which is now focusing onto the longer term growth catalysts. And again, the aim is for the free cash flow from the Stokstad Midt segment in the Airfelden field to fund the exploration of the remainder of the portfolio. And this is regardless of the outcome of what happens in Schwarzbach South or Stieg or the Graben programs. So this is the funding that comes just from the Stokstad Midt segment. What I'd like to do is just to highlight 2 of the more material prospects. Firstly, Stieg Deep, this 2U prospective resource of 16 million barrels, tested for free during the development of the Stieg field, which I described on the earlier slide. And also the Weinheim prospect. It has prospective resources of 180 million barrels in the 2U case, and that we aim to target as soon as the funding that's generated from the program allows us to do that. So moving on to the next slide, we also see significant growth potential in Germany. The acquisition that we are making delivers a ready-made portfolio of production, development, appraisal, exploration opportunities. But it's important to note that the Upper Rhine Graben has been developed without the benefit. Much of the Upper Rhine Graben has been developed without the benefit of modern 3D seismic data, petrophysical software, or indeed completion technology. And we see potential from a number of elements within the basin. Firstly, the consolidation and portfolio rationalization that companies are undertaking within the basin, and it's within that context that Rhein Petroleum are currently negotiating a development asset in the basin, and also from the application of new thinking and the application of new technology. I just point to the Rommerberg field. That's the largest field that's been discovered in the basin, and it was discovered by serendipity. This was in 2003 during the drilling of a geothermal well that went through into the Bunter, and this discovery, the largest discovery in the basin, was made 50 years after the discovery of the Stockstadt old field, which is immediately adjacent to Erfelden. So with that as a top level review of the growth catalysts, I'll now pass back to Stuart for a commercial overview to look at our next steps and as a summary. Thank you.
Thank you, Larry. So as part of the transaction, earlier this week, we published a Competent Persons Report, or CPR, which provides an independent review of the subsurface, reserves and resources, and where appropriate, the economics of the portfolio being acquired. We were pleased that the CPR validates our internal views on the attractive and robust nature of the asset base, with strong near-term cash flow, NPV accretion, low operating costs, and quick investment payback. Importantly, all the economics shown on this slide are just for the existing 2P reserves, Lauben and Schwarzbach, and include none of the upsides from development or exploration that Larry spoke to a moment ago. Turning now to slide 15, the transaction remains subject to a number of conditions, including a successful equity raise, the publication of an admission document, and approval from the Beacon Energy shareholders. Based on where we sit today, we expect to publish the admission document in late January, with the general meeting a few weeks thereafter, and that would allow us to close the transaction in the second half of February. I should also say we've had a number of inbound inquiries from retail shareholders and others asking if they will have an opportunity to participate in the equity raise, and we were pleased to confirm earlier this week that we intend to engage primary bid to ensure that all retail investors get that opportunity, and we will provide more details near the time. So in summary, as a board, we're delighted to have reached agreement on the proposed transaction, which we see as transformational for Beacon and potentially hugely value accretive for our shareholders. The Rhein portfolio has the potential over time to deliver multiple catalysts and material growth up to 4,000 barrels per day from the existing reserve and resource base. We believe the transaction metrics are highly attractive, with no upfront cash consideration and all funding invested directly into low-risk, value-enhancing drilling. In Germany, we see an attractive and supportive operating and fiscal environment with scope for material value creation. And outside of Germany, we believe the Rhein portfolio provides a strong platform to pursue further new ventures and transformational growth. Thank you for listening, and we're now very happy to open up for questions.
Stuart, Larry, that's great, and thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Larry, Stuart, as you can see, we have received a number of questions throughout your presentation today, and thank you to all of those on the call for taking the time to submit their questions. And Stuart, Larry, if I could just hand back to you to address those questions where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Okay, thank you. And thanks for sending the questions through. The first one that I'll cover comes from Glyn, who asks whether we could simply say what the current production is of Rhein Petroleum today. Currently, there are two assets that producing assets that Rhein are in. There's the Schwarzbach main operated license, which is 100% owned by Rhein Petroleum, and that's currently producing 15 barrels of oil per day. And Rhein Petroleum are a non-operated 50% equity partner in the Lauben field, and the net production from that to Rhein Petroleum is 25 barrels a day, in the region of 25 barrels a day. So currently the company has 50 barrels of oil per day production that's coming in. I think the important thing about that production, and particularly on Erfelden, is that the additional development opportunities that sit within there are proven, immediately adjacent to that production, and can benefit from the production facilities that are in place that are currently managing that Schwarzbach main production. There's a sort of a couple of questions that have come in terms of the fundraise and when the shares will resume, which I'll cover. The first one is from Andrew B, and his question is, what does the fundraise mean to current shareholders, particularly those that are unable to participate in the raise? And then he gives an example of the number of shares that he has and how many he'll end up with, and what the price of the fundraise will be. And then there's a question on when the company's shares will resume trading. What I'll do is I'll pass both of those questions to Stuart.
Thanks, Larry. So in terms of the fundraise, as we outlined, we will be giving retail shareholders the opportunity to participate through the primary bid platform. For those shareholders who are unable to participate, obviously there will be dilution as part of the transaction, but in our minds, and when we looked at this as a board, we see the huge value accretion from the transaction will more than offset that dilution. So if you're a shareholder and you decide not to participate in the raise, your shareholding will reduce, but obviously you will have a shareholding in a company which post-transaction will be much larger and much more valuable. In terms of the details of the pricing of the equity raise, I mean, that will be determined by market, the appropriate time. We set out the timetable, so we are aiming to publish the admission document in late January. Assuming that shareholders approve the transaction and all the other conditions are satisfied, we'd be aiming to complete in the second half of February, and that is the point at which the company's shares would resume trading.
Okay. Thanks, Stuart. There's also the same question that you've just answered that came in from Samuel B about the equity price, which you've addressed. There's a question that's come in from Sam E, and what do we see as the greatest risk to the execution of the strategy? Well, I think the overall risk profile of the acquisition is very low. So at this process, in terms of the acquisition itself, there are still some remaining elements that are required. We need to undertake the equity fundraise. We need shareholder approval. With those two elements, we can then get resubmitted back onto the market for trading. So we need to go through those two pieces. In terms of the execution of the development strategy, we are in a very low risk political region with Germany. The great thing is that the processes and systems in Germany are very well known, very well trodden, so we can go through the development programs in a predictable and managed way. And what we're intending to do in the early part of the strategy is to focus on the discovered resources. So Stockstadt Mit has been demonstrated. So the reserve, there's a well that goes through that has hydrocarbons that sit within them. Similarly with Graben, and similarly with Stieg, these are wells that have been drilled that have produced hydrocarbons. So we know that the technical risks associated with those are very low. Clearly, the risk profile will increase as we work through the portfolio, particularly as we become exposed to the exploration components. Stieg Deep, as I described, that well will need to be drilled to supply water to the development of the PBS. So that's essentially a free roll of the dice. And then with Weinheim, it is a significant and material project, and we'll look at how we go about managing the risk of that as we progress the program. So I think the principal risks are completing through in terms of the RTO and the acquisition. Thereafter, the execution strategy, it'll just be down to normal oil field operating risks that sit within those assets. Okay, there's some additional questions that have come through. The first one is from Andrew B. Will the board be participating in the race personally? Andrew, yes, that's the intention, that some of us will be participating. Samuel B, will the company be looking at other projects in different areas for newer acquisitions? I think the principal focus for us in the immediate term is to close on what we're doing. And then during the course of this year, it will be to deliver the development program on Erfelden. We have an excellent operating team in country. Leo Coote is a prospective director who'll be joining the company. He has direct experience both with Rhein Petroleum and in Germany, and he has a drilling background. So that will be important for us to make sure that we deliver on building the cash flow and the fund base that we'll need to grow the business. But we will also be looking to grow the business. So there's this current asset that's under negotiation in Germany. There will be a number of additional leads that will come from that. But during the course of this year, we have been exposed to a significant deal flow, the deal pipeline from which we've selected Rhein Petroleum. So once we are absolutely certain that the German operation is working and delivering what it needs to deliver, the intention is to continue to grow the company, and that won't be restricted to Germany. It will be in Germany, and also it will be outside of Germany.
Larry, Stuart, if I may just jump back in there, and thank you very much indeed for addressing all of those questions that came in from investors this morning. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended for you to review, to then add any additional responses, of course, where it's appropriate to do so, and we'll publish those out to everyone on the platform. Larry, perhaps before redirecting those on the call to provide you their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Okay, thanks, Jake. In terms of a summary, we see this as a material and value accretive acquisition. This has followed an extensive screening process during the course of the year from our conveyor belt of opportunities. What we're doing is we're accessing discovered resources. We're focusing on cash generative production. These are high margin assets in an area, in a country which has got very attractive fiscal regime and a very low political risk. We really importantly secure an operating team that has extensive in-country network. It's got a proven operating track record and an excellent and focused ESG agenda. The acquisition itself, no consideration is being paid for the acquisition. The money's raised is to fund drilling activity, and that drilling activity we see as being the value trigger and the value creation. What this does is it sets Beacon on a journey to become a self-funding, cash generative, profitable E&P company. And what it does do is it gives us a portfolio of catalysts, and it gives our shareholders a portfolio of catalysts over the next couple of years to share in that journey. So thank you very much for your time, and we look forward to your feedback. Thank you.
Larry, that's great. And Stuart as well, thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Beacon Energy PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.